turn around Tuesday that we could postpone because we have Fed Day tomorrow. Dollars selling off into the Fed. Metals are higher into the Fed. Uh, Stock market a little bit better. S&Ps are up about 9 handles. It's my view that I just got through talking to Joseph Wang at Fed Guy 12, and Joseph used to work at the Fed. So I follow him as a Fed watcher, and his belief, and I agree with him, is that the market is over its skis on the aggressive nature of an easing campaign, and that we'll get that quarter, and then it'll be deliberate that the dot plots may change tomorrow after the presser, and that's going to be a disappointment for risk that has more aggressive easing priced into the market. So we'll see that the dollar's selling off into it. I did buy the Dixie at 97 today. I'm risking the low of the move, which comes in here at this 96.37. So it's about a 60 pip risk. The whole world is looking for 95. And of course, I could see how they could come up with that technical target. So I am going to give it, though, one chance to surprise people if the Fed doesn't go the way the majority of the market participants think it's going to go. I had a very good trade on the short side that we started to build last week in USD CAD, up around 38.50, 38.60, and I'm flat now. I think there could be another 100 pips in this to the downside, maybe around 36.30, something I've been talking about for a while. So we capitalized on this wave from last week. Yen is under pressure as well. But I don't know about pressing the yen too much. Maybe we get a third drive. And the reason for that is what's happening in yields, that we've hit my target in the 10-year yield at 4%. Maybe we're going to have a third drive down here. But I'd be thinking about liquidating Treasury paper after this decline in yields, because there is a possibility this turns out to be not just a low for a bounce, but something more important. A lot of people calling this a big triangle. And if we hold here and start heading up, it could imply sharply higher rates, which does not make sense in the current environment with people worried about employment. But I'd rather go with the formation than sentiment and what the narrative is. So be careful. Tomorrow might be a great buy the rumor, sell the fact in treasuries. So take a look at that. The S&Ps, you're on the daily. We're still not confirming after this huge rally that we've had and the throw over. So we still have this throw over. And if there is some disappointment, I think we could trade back down to the throwover line, 580. It's about 40 handles away. And then we get underneath this 580 level. There are all kinds of different levels that we could trade to, maybe even back towards the September low. I also want to touch on energy, which is acting pretty good. I said last week, when I was on with Maggie, if we took out Friday's high in USO, which we're doing right now, that'd be a pretty good signal. And that's what's happening now. The major resistance is going to be 78, and we get through that. I think a lot of this has to do with Russia and them being able to export. So we'll see what happens there. That's acting okay. Natural gas, not as strong today, but still, decent action. We're almost back at the highs. I don't know what this tick was. Maybe there were some Nat Gas statistics that showed a build, and if this is either a mistick or they took it down, but nothing wrong. Could we correct again? Of course, pull back to 280, but from when this trade was called, you had all of this wave. And then I talked about this. If you count this candle here, Look at what it did. It went right to the 61.8 level. So Nat Gas, I'm going to stay with that through the Fed. I also want to talk about Bitcoin because with the strength that we've had in the market, Bitcoin has certainly been a laggard. Okay, I'm not saying we haven't had a decent rally off the lows, but this would have been in other times enough of a reason with the dollar getting hit, risk on in equities that it could have done better. So if you want to stay long, you should probably have your stops under 113 because if we take that out, I think we're going to challenge the lows again if we get some type of risk off action going into and after the Fed. So that's about it. Don't bet the farm in front of the Fed. You could have some positions on, but light, like I'm doing in the dollar and holding energy, but don't initiate new positions today. Wait for the reaction to the Fed um, during the presser. That's going to be the whole ball game. And I think that's about it that I wanted to cover. We have made new highs in gold. Okay, here we are, still acting okay. If we get risk off in the S&Ps, I think we'll get risk off in gold too. Silver again, a new high, still acting better. Gold silver ratio back down here at the low. And you would think that with what's happening here in the euro, that we'll finally take out that high, the move at 1830. So a lot of people are going to call this a breakout, and maybe we do go towards 1980, and that'll give everyone their 95 Dixie handle. But we could also just have some type of stop hunt above this high and add new highs. One negative I could talk about in euro, and this was a positive I talked about for a long time that we had a confirmed high, which implied a new high. Well, we're almost there. But with the RSI reading here, I don't think we're going to take out 70. We'll see. If we're going to 120, that's a possibility. So we'll see what happens tomorrow. Good luck. If you feel nervous about the Fed or you don't have any conviction, it's not illegal to just be flat the market and let the dust settle instead of surrendering equity to a big red event. So that's a wrap, everybody. Have a good day today. I have a crypto analyst that uses Astro tomorrow that's going to be with us as my guest. And until then, that'll be at 10:30 a.m. EST. Don't just count your pips, count your blessings.